today and it takes 3 to 4 years for the order to come, whether it is difficult to manufacture at the manufacturer level, or they are also having more orders globally and hence it is taking more time. These are the 3 questions.
Okay. Thank you, Romil. Somehow I have noted down 2 questions, but if I leave out something, feel free to interject.
That Yeah.
Now, your first question was, in which quarter do we start? We have all along maintained that we will be operational definitely for the second and for the third and fourth quarters of this year, which I mean is the second half. In our current reckoning, we don't see any change on that. We should be operational definitely in the third quarter of the current fiscal.
Okay.
I trust that answers your first question.
Yeah.
Okay. Your second question was regarding CWIP. One reason you are not seeing very much of CWIP is simply because some of it would be in capital advance for new plant, not necessarily as capital work in progress, because some of it is also in the capital advance. So that's 2. Point number 3.
The number on that, how much would be sitting there?
One second, I'll tell you the third one, which is the most significant one, is that if I take the key lines are 85% funded by 85% of their costs are actually funded by supplier credit in the nature of an ECB. Right? So which is things like Hummus backed, which are insurance backed. So those actually trigger in later. So you will find at one point there will be a single massive entry which will add to it when that payment is made out.
Okay.
So these are the reasons why you're not seeing them. But suffice it to say, payments are galloping now. So because we are at the tail end or almost at the tail end of the project, of the first project at least. So naturally you will see payments galloping every month at this point of time. So probably when you see the June quarter results, wherever you will see much more would have been already been paid out.
Okay. Got it.
Yeah.
The third question was on the capacity built up by the global players. Why?
Right. Okay. Sorry. Yeah. I mentioned I missed the third question. So right. So on that, let me tell you, there are very few, in fact, good quality or capable people to produce lines even for simple biaxially oriented materials, whether it's polypropylene or polyester. Now within this, the bulk of the market is actually for packaging, where the volumes are humongous compared to the volumes we talk about for capacitor films. So those manufacturers, there are really very few. I don't want to advertise somebody, but there is some who's very good, there's some who's good, and that's about it. And so you will find that they are bogged down by packaging film line orders substantially. Even though packaging film market today looks dicey when you look at the Indian situation, but tremendous capacity expansion continues in that segment, and which is why there is a very long delivery period. But having said long delivery period, just buying a machine does not give you the skill or the capability to produce a good dielectric films. It's not like you buy a blender, you're not going to be a good cook and, at least I'm not going to be a good cook just because I bought a blender, right? So you need to know how to use that and turn out a good dish, which is exactly the situation, Romil, here in the case of making a good high-tech product, especially for the value-add business. Surely there will be competition, and as a principle, we encourage competition, but that makes life more challenging and fun. Having said that, let me tell you, Romil, again, that once the Barjora expansion and the new line at the RAK goes in, let me divert for one moment. We are already considered quality, product, innovation, development among the top handful of companies, and I mean one handful of companies in the globe. Where we take a hit is on capacity. Now, once we have these two lines in, we will be among the top handful, even in terms of capacity, in a non-China world. Now, fortunately or otherwise, there is definitely a China plus one philosophy which is all over the world. Plus, our focus is always going to be on the upper end of the applications and the upper end of the films rather than the commodities. As you might have heard me earlier, a capacitor is there in your fan, bottom end. Is hardly a rigorous application. But that's also a capacitor film, also imported into the country, because at the end of the day, only 33% is available domestically. I don't want to be in that business of a simple bottom end film. It goes all the way up. I would rather do a locomotive or a capacitor for an EV, which is where the challenge lies. Does that sort of answer your question, Romil?
Yeah, sure. Just a clarification. So that means globally, not a lot of capacity is coming up in the dielectric film in which we are expanding, right? That's
not a lot. Not a lot.
Okay. Got it.
Yeah, there is capacity, of course. I'll tell you something. The point I was trying to make, which I didn't elaborate on, was that there are only a handful of good companies in this business. Other than China, which has a proliferation of companies, globally, you can probably count on one hand the established companies in this business. And you need to be rigorous, again, as I was explaining to Pranay earlier. Even a company which buys base film and metallizes it and sells the metallized product is selling a dielectric film. So you should need to distinguish between a base film manufacturer and a metallizer. For example, a large Indian BOPP firm, a company, has announced that they're getting into dielectric films. But they're actually getting into metallizers, which is good for us because we would certainly tie up with them to sell them base films.
Okay. Got
it. Clear, Romil?
Got it, sir. Thank you so much and wish you good luck.
Thank you, Romil.
Thank you. We have the next question on the line of Naitik from White Oak Capital. Please go ahead.
Thank you, sir, for taking my question. So, sir, first, if you can help us with the EBITDA split between BIAX and COEX division for this year.
Sorry, I missed that. You wanted the?
EBITDA split between the BIAX and COEX division.
Interesting. Now, the EBITDA, the range for the dielectric films, as I have said earlier, and I'm sure I think we've met earlier, the EBITDA margins for the dielectric films, I'm not going to go into a very specific number, I'm going to give you a range, remains over 40%. The EBITDA margin for the other business, for the co-extruded sheets and films, is in the range of 5 to 6%, which is where it used to be. So it's sort of at the same level as it was through much of last year.
Even for current year, we have earned 5 to 6% margins in our BIAX division?
No, sir. You're talking 5 to 6 is the co-extruded films business.
Right. And even in the current year, we have earned similar margins?
That's right. In fact, if I take Q4, in Q4, as I think I read out, actually, in Q4, it was a very interesting phenomena. Both the businesses did a higher EBITDA. But what happened was, typically the share of our COEX business is of the two businesses, 1/3, 2/3, as you might recall from earlier.
Right.
In the fourth quarter, the share of the COEX actually went up to a little over 70%. I'm not talking EBITDA share, I'm talking sale value share. Because of that, the EBITDA appeared to go down, whereas actually both individually the EBITDA went up.
Got it. And
it's just an arithmetical quirk that happened actually.
Right. And sir, if you can call out the volume for BIAX division for this year?
The volume for this year, just give me a jiffy, I'll give you a sharper number. Bags, not coax. But the bags dispatches or the bag sales was like in the earlier year very similar. It was 3,600 and something tons.
Got it, sir. And sir, if you can also give the CapEx guidance for FY25 and 26.
We have indicated one thing is what would happen by FY25-26 for sure. The existing line would be commissioned, the Barjora expansion would be commissioned and done, so the capex would have broadly been incurred. Now for the in the 25-26, we should be working and should be close to or should have commissioned the other line in the Middle East. So that would be another 250 odd crores that we would have invested there through the subsidiary.
Right. Got it, sir.
And we are toying with another line to go into a next level of technology and manufacturing process for the same application. But that would be beyond. That would be another year or so beyond.
Okay. Got it, sir. And sir, just going back to the EBITDA question. So in this year on an absolute level, if you compare against FY23, our EBITDA has declined by 11 odd %, right? From 74 crore to about 66 crore. So if you can just help us understand which division hurt us more in this particular year?
Let me put it to you this way. If you really look at the EBITDA margin, it went down from 14.5-ish to 14.2-ish. So as a percentage, it's really not gone down so steeply.
Right. But our revenue grew, right? I mean, our revenue decline was lower, right?
Revenue declined for various reasons which I had mentioned to you.
Right. Got it.
Now, revenue decline had multiple reasons. Since you asked the question, let me give you a sharper answer on that. One was raw material prices through much of the year were down. Now, my sales went down by 7.8%. Raw material prices were down circa 11%. Point one. Point number two, if you see the sales decline, something like 5 crores came out of the job work we did on the old packaging BOPP line which we sold off, remember? Which I had mentioned that. So that was another 5 crores. Thanks to the Red Sea situation, I have material worth almost 1.5 crore which sailed from India between January and March, which was on 31st March still on high sea, taking much longer. Accounting standards required that we didn't count that as sale. So there are some of these factors. Of course, sale went down, but much of it was, you remember, whether we take in the coax business, we are selling prices directly linked to the raw material price, and that is 2/3 of our business. So when the raw material price went down 11%, straight away that would have had a direct impact and the price would have gone down.
Bhaskar, this Dhiresh here, sir, coax, I understand. If you can, split the EBITDA for the full year.
You should kindly come in the queue for follow-up questions.
Okay. Yeah.
Thank you. Participants are requested to kindly restrict your questions to 2 per participant. Participants are requested to kindly restrict your questions to 2 per participant. We have the next question from the line of Pradyuman Chaudhary from JM Financial. Please go ahead.
Yeah, hi sir. My first question is, if you can just give the revenue contribution for coax and biax for the full year FY24.
You want the revenue split? Give me a jiffy. Excluding respective other income, which both of the divisions have, shall I just give it to you product-wise, because we have a multiple product in this coax, but give me a jiffy. if the dielectric film sales were 146 against 156. The sheets and liners, and let me add the film to it, was 255 and 60 was 311 against a little bit against 340. There was another operating income of about 4.5 crores against 4 crores.
So, for the bias division, why was there a revenue decline?
Sir, at the end of the day, polymer prices determine the selling price. It could be an immediate impact, or it could be a formula determined price adjustment for major customers. Now, as I mentioned to you, polymer prices went down approximately 11%, between 10 and 11, and I'm talking about polymer consumption, right? Not for stocking or something. So when the consumption went down 11%, we are a fair player. We are an intrinsically fair player, and we work on long term. So our principle is that the prices are adjusted when there are major swings in the raw material prices. Of course, that works both ways, and I think in the petrochemical related business, we have to respect that there will always be price fluctuations depending on various situations, including geopolitics.
Understood. And secondly, on the so just like my top of the envelope calculation suggests that we haven't really seen a shift in realizations yet in terms of due to better product mix. Like I'm accounting for this 10%.
I mean, I'm going to preempt your question, surely in the interest of time, but let me make one thing clear to you, that this year I've had a zero capacity addition. In a zero capacity addition, my plant is firefighting all the time to balance customer load. So like it or not, I have to give a range of products to a regular customer, from the bottom to the top. I mean, I can't sell a shirt with no button, right? So I have to give a package to many customers. So there is no way you can see that till capacity comes in. So my volumes are pegged at available capacity. My mix is determined, my value add or high value add to low value add product within the dielectric film framework is determined by the mix that a customer would need. I hope that clarifies your question.
Yes, it does. And just one last question. Two questions. One is, since we are talking about starting production from the new line in Q3 onwards, so have we already received the machine, or when exactly is the machine coming?
The machine, let me tell you, these kind of equipment are massive numbers of containers, massive number of pieces. I mean, my guess is it would come in 50 to 60 40-foot containers. Now, equipment comes in small bits, and yes, bits have started arriving at the plant.
Okay, fine. And why are we going to the Middle East?
This is the operator here. Sir, would request you to kindly come back in the queue for follow-up questions.
Yeah, that was just the last question, then I'm done. Why are we going to the Middle East instead of setting the capacity in India itself?
Okay, there are many reasons. One, we are very clear that our product, our skills put together deserve a global standing. So we want to be in a place location from where we can meet the US and European requirements conveniently. At the same time, if you are near a good port in the Middle East, you are practically in Western India, if I compare it with, say, a location like Bengal where we are today. So we are not losing a locational advantage. Importantly, India and the Middle East, India and the UAE have in place an FTA agreement called the CEPA, which allows free trade across. Notwithstanding that, I am going to be in a free zone in the UAE. So we are also hedging risks. And as you are aware, there is a big thrust to this India-Middle East corridor. want to be one of the first utilizers or one of the early utilizers of the benefits of that corridor, which I think is a near reality now. Both our end and the Middle East are very, very seriously working it. When I say our end, I mean our government are working very seriously at it. So we are hedging risks. We are going nearer a market. We are going to places where in the long term energy should be stable. I will not say polymer availability will be easy because this is a special polymer, may or may not be available, but it's not available in India either. And I'm not even sure if it's available easily in the Middle East itself.
All right.
I hope that clarifies.
Yes.
Thank you. We have the next line of Manan Shah from Moneybee Investment. Please go ahead.
Yeah, hi. Thanks for the opportunity. I wanted to understand why did we go ahead for such a large fundraise, because since 80-85% of the capex was going to be via supplier funding, supply credit, and we had already secured funds in the first round from Malabar for this capex. So what was the need to go for such a large fundraise?
Okay. The answer would be very, very clear. 85% of the ECB supplier credit in the nature of ECB only takes care of the core line. Now, in this business, the core line is less than half the total project cost, and I emphasize less than half the total project cost. There are areas which I've mentioned before that of the plant, which, for example, require extremely high purity inside, extremely highly pure air, clean air, as pure as you would find in an ICU. All these things add to cost. There are downstream equipment which are very expensive, and because we are handling an extremely thin film, even 6 micron is extremely thin. Let me emphasize that. Somebody asked me what was the split. 6 micron is as difficult to handle as is very, very thin film. Gets more and more difficult, of course. So all those equipment are expensive. So the idea was that we are not going to be facing any delay or anything in this project implementation for want of funds. Our cash generation looks strong enough to have supported it without these raises. But nonetheless, remember, cash generation comes in as each unit starts operation, whereas my spend would be earlier. So it was a timing that we wanted to capture on, and apart from these two, we are toying with one more, so we thought let's see whether that make sure that we can cover it. All that said, we also wanted to make sure that we were done with the raise well before political uncertainties of the election kicked in. I mean, everybody assumes foregone conclusions, but as risk management in the business, I have to assume that anything can happen.
Okay, understood.
Does that answer you, sir?
Yeah, that answers my question. Thank you. My next question was the lead time from the supplier, which you had earlier indicated, that lead time still maintains at those levels, or there has been some contraction or elongation in this?
I'll tell you what, there are marginal improvements, and I emphasize marginal, and why those marginal improvements are there are simply because offtake on packaging lines has gone down a little bit, or is going down other than commitments, because I'm sure you're aware, all of you all monitor the polyester film business in India, for example. I think you're all aware of that position, right? So, the cyclicity of that market. So that being in the down cycle now, I think there is a little bit of room available, but those are only tweaking out months out of a vendor rather than tweaking out years.
Okay, understood. And just lastly, the Chinese manufacturers, do they also source the machinery from the same supplier, or they are largely Chinese-made machines?
No. The core equipment, I think they don't have a choice.
Okay.
They might take some of the downstream locally. Now you might choose to have, there's a lot of downstream equipment to it. Now you could have lower cost, inferior, not necessarily inferior also, let's say lower cost downstreams. But when you are aiming for a super product for a super application, we would not cut corners on those. Surely there are certain things which may be good out of China. I mean, even some of these big German players, etc., they have operations in China where they make some of their components. That is still Chinese, although manufactured by them in China. So there is, but for the core line, there is no Chinese alternate. Or any other alternate.
Okay. Fair point. Thanks. I'll get back in the queue.
Thank you.
Thank you.
We have the next question on the line of Gaurav Agarwal from 91 Capital. Please go ahead.
Hi, sir. Thank you for the opportunity. Sir, if I may just pass on one feedback. I've been trying to fix a meeting with you since the last 4 months, been in touch with the investor relations agency also. But sir, somehow I'm not able to secure a meeting. So sir, would be very, very grateful if you guys can, accommodate half an hour kind of a time slot.
Gaurav, let me answer that right away. Yes, I'll ask the Orient Capital to fix a meeting at the first opportunity. The only thing I would like to mention is that yes, we have not been able to meet everybody who wanted to meet us. Fortunately, there have been, the interest has been very, very strong. That said, I'm sure you will also appreciate that we spent our time on making sure we were delivering on time rather than, diverting our attention. But
definitely, sir, that is the first priority, definitely. No. But just that, if it is possible for you guys, then we'll be definitely happy to come over.
I'm coming to a specific. Where are you based?
Sir, I am based very near to you. I'm in Gurgaon.
Oh, you're in Gurgaon. I'll tell you what. If you can share your number, definitely in the next 10 days we will meet.
Thank you,
either in
sir. And
midway or
a couple of just a couple.
Hello.
The participant has dropped from the queue, sir. We will move on to the next question. We have the next question on the line of Mr. Tej Patel from Nivshay. Please go ahead.
Sir, am I audible, sir?
Yes. Yes, you are. Yes, you are.
Yeah. Thank you so much for the opportunity. So, sir, since in the start of the call you were discussing about the value-added films versus, let's say, the films which are used for normal application. And hello, am I audible?
Just give us a moment. It seems.
I can hear you, but I'm getting.
I think there's some. Yeah. Now it's okay. So, sir, I was saying, sir, what would be, let's say, in your previous call, you said the demand for the dielectric films in India is about 15,000 tons, right? So, can you give an approx split between what would be, let's say, the, high usage of those films in a high-end application versus, let's say, a normal films?
Let me put it to you this way. That is actually extremely sensitive information from a marketing perspective. But let me add to that another rider. We sell a film for use by the capacitor manufacturer to make a capacitor. When he shares with me the information on its application, you will appreciate it's under very strong confidentiality clauses. So I cannot actually share my customer's information to the public domain. So perhaps I'll have to beg to be excused from answering that question.
Okay, sir, no problem. And sir, you said that our...
Which firm were you from? I missed the name.
Sorry, sir? Tej.
Which firm are you from?
Nivshay.
Okay.
Yeah. Sir, and one more question. You said that our first line would be coming in the third quarter, right?
Right.
So how much utilization do you see for this financial year and for the same line in the next financial year?
Okay. I'm not going to hazard a number on that, but I can tell you that startup times and reaching a high utilization level are not very time consuming. Not that one will be able to produce at 100% on day one. All machines need to be run in. So one will run it slower first. One would run it on easier products first.